Yeah, first of all, maybe a few words on Untitled INC. INC, it stands for It's Not Centralized, and that's a token economy experts and ventures network that I co-founded back in 2017, when I moved into the space. So we are about roughly 25 people, early crypto guys and guys like myself with about 20 years or more experience in consulting and a little bit VC. Doing advisory work for corporates and startups in the field, but also launching ventures. For instance, recently, 4 years ago, liquidity, looking into fan engagement and financing for sports and the creator economy with customers like Bayern Munich, Borussia Dortmund, and more. Or Spool FI, that's a DeFi yield DAO where you can build risk-managed portfolios. And I personally have been looking into the whole topic of token economies and sustainability for about 2 years now, into carbon credits, carbon reserve currencies, nature-based carbon trading platforms, and more. And I will talk later a little bit about an own venture, about Greenbase, looking into tech-based solutions and carbon credits and investments in the space as well. With that, I will be speaking about a little bit framing the topic, what is ESG, talk about key challenges and what I understand by a token economy before I show you a few selected project examples, what is happening in the space. And to start with that, what you can see here in the middle are the 3 criteria: environmental performance, social performance, and governance performance, which are at the core of the concept. And performance gives you already an indication that it's an investment-driven approach. It's an assessment of corporates from the investors' perspective of corporates according to their performance in respect to those criteria. It has been developed actually roughly 100 years ago by a guy named Adolf Berle at the Columbia University in New York, who worked about the opportunities to impose social obligations in for-profit organizations. Then in 2004, Kofi Annan, back then Secretary General of the United Nations, took up that concept and wrote a letter to about 50 CEOs of large corporates and urged them to develop methods and criteria to assess performance and to develop also initiatives to improve performance of their corporations. Since then, we have that on the right. About 200 companies signed such a commitment, such a declaration. A whole assessment industry actually emerged around it. For instance, by companies like MSCI, the index provider and assessment company, a whole investment products developed, provided by large asset managers like BlackRock, Vanguard, and more. Also, DWS is certainly active here. And we are looking at an industry that covers about 2.5 trillion assets under management globally, so about roughly 0.5% of global assets under management, with a, I would say, a large focus on European assets, 2 trillion, 500 billion or so in the US, and 130, 150 billion rest of the world. An emerging asset class. And if we dive a little bit deeper into those dimensions, we can see here the environmental dimension, environmental performance. This is largely coined by discussion about climate change, about carbon emissions. And you see here the exponential growth of the carbon emissions that we see around the globe. You can see since the 1950s, it's really taking off. And this is driven by the fact that today, 92% of the global energy supply is provided by fossil fuels. So we are talking about coal, oil, and gas. Yeah? This is producing 75% of global emissions, and these numbers increase year by year despite all the investment into renewable energy, electrification of cars, and more. So the challenge here is largely to replace fossil fuels by alternatives. Renewable energies, electromobility is a topic, hydrogen, green hydrogen, fully synthetic carbon neutral fuels, a big topic in the public recently here in Germany. The issue is here. This is a topic we are also covering, for instance, here in Greenbase. The second dimension is the social performance dimension. And what you see here is a cobalt mine in Africa. Yeah? This is a current picture, 15,000, mostly kids, yeah, working with their hands to mine cobalt, which is then actually used for batteries, for mobile phones, produced by Apple, for battery electric vehicles and more. So this is modern day slavery, worst conditions, deadly conditions actually, and this has to end basically. Yeah, huge challenge here. And the third dimension here is the governance perspective. What you see here is a corruption index. And what you can see across those professions, or yeah, I would say professions, the legislative, police, government officials, down to the tax officials, business executives, religious leaders at the bottom, is that globally between 20 and 40% of those individuals are corrupt. Yeah? We are living actually in a world that is very, very privileged here in Germany because we can trust our banks, we can trust our judges. This is not true for a large part of the world. Now, let's dive a little bit deeper into the environmental dimension, because this is the dominating aspect when ESG is mentioned also in the investment industry. A key topic and a key insight is that to reach this goal of carbon net zero by 2050, which is a common accepted goal as of today, we need to channel about $275 trillion into the transformation of the global infrastructure. That's an unbelievably high number, a number that has been calculated by McKinsey. It represents about 3x the global GDP over the next 30 years. So around 8% of the annual GDP of last year has to be channeled into this infrastructure transformation to achieve that goal and to avoid that the living conditions for us become, let's say, rather cumbersome, rather difficult, with floodings, with storms and more increasing. What is done in that field? Corporates obviously launch their initiatives, they invest in solar panels on their plants, they decarbonize their production and more. And this is largely driven in Europe, for instance, through a so-called mandatory carbon market that has been established around 20 years ago. The idea here is to basically issue so-called emissions allowances that need to be purchased by the largest polluters. It's about 40% of European corporates, so cement producers, coal power plants, etc. They need to be purchased as a license to operate, and the available volume is decreasing year by year in a predictable way by 3% or so. Yeah? That's a market around globally $1 trillion per year, with 820 billion of this commodity in Europe. Aside that, there's an emerging voluntary carbon market where, for instance, consumers are urged to invest in planting tree initiatives, protecting the rainforest and more. For instance, when you take a flight, you will frequently encounter that. And there's thirdly, a large industry emerging into green tech ventures. Green tech venture funds are taking off right now. The key challenges in this market are that at the beginning of this market, of this year, an investigative group by The Guardian and Die Zeit actually uncovered that about 90% of those voluntary carbon credits are actually worthless because they don't deliver to their promises. We will look into the reasons why that is. And this has real-world impact. Delta Airlines, who claimed that they are a carbon-neutral airline, is sued for about $1 billion in fines currently. And there are an increasing number of corporates that face these challenges. As a result, the CEO of the biggest verifier, Vera, resigned a few months ago. And we are seeing more of this. So this market took a huge hit. If we look, I want to take you on a little bit journey what is going wrong in that market. I personally was asked to compensate my footprint for a purchase I did on eBay recently. And if I look into that, I can compensate 1 ton of CO2 for about 23 euro. I can see that it's a South Pole project, wind energy in New Caledonia. I don't find much information around it, general information here, no end-to-end information, where does the money go, what does the project do, etc. If I move on to South Pole itself, I can find the same project. Also there, it's not clear how much money actually is going to the certifier gold standard here and so on. But I can see that I can buy the same ton of CO2 for 16 euros. So what is happening? eBay is taking actually a 65% markup. Yeah? This shows you that price discovery is really a big problem here. And if we look at more broadly the challenges here, the whole market is actually hard to access. It's OTCs, it's brokers, it's phone calls, it's non-digital. It's intransparent and illiquid. There are a lot of frictions in there. There's a missing data transparency among the plethora of data points there. And there's a coordination problem among the stakeholders. There's no overarching incentive mechanism among the projects, developers, the green tech ventures, the companies, the investors, the assessment agencies, the regulators, and the citizens. This is an excellent use case for a blockchain registry and a token economy on top. Yeah? The key elements of why you should use blockchain are given. And before we dive into that, quick recap of what is a token economy. 2 constituent elements. First, a blockchain. That's basically a registry, a database, shared across computer nodes. And we have the state of the ledger being updated by a consensus mechanism. That's why it's called a trust machine. And it provides us with an audit trail to track and trace who owns what when. And second, the token, a unique digital bearer item or instrument that can represent, for instance, a carbon credit. It can represent a profit participation right and more. And it can be transferred P2P via the internet. That's why it's called the Internet of Value. Selected project examples. What is happening? What you can see here on top is the origination of the carbon sequestration in this case. I'm looking at the voluntary carbon market here as an example. So there are, for instance, a rainforest project. There can be a green hydrogen project. There can be a wind energy project. Yeah. It is certified by a developer of such project and a validator Vera and Gold Standard are two big ones. And this is usually resulting in a so-called off-chain carbon credit that can be traded via phones, via brokers, etc. And what emerged there are companies in the blockchain space like Toucan, like Flow Carbon, who actually took those credits and tokenized it, put it on chain, and make it tradable on chain. Yeah? This is then, for instance, sold by marketplaces like Senken to, on the right, the buyers like the corporates, like the Amazons, the Zalandos, etc. Other investors in carbon markets, they're carbon market funds. Any buyers, resellers like eBay, or the consumers. Then you have at the bottom, the green box is the Open Forest Protocol as one example for a project developer which is directly producing native carbon tokens, carbon certificates. Obviously, you're saving one step here. And these also can be pooled, by the way. That's indicated by the CP there. And then you have companies like Particular in this ecosystem, which is assessing the quality of those tokenized assets. And then you have us, in this case, Greenbase, who are looking into tech-based solutions, for instance, carbon-neutral fuels, and how they can actually mitigate the problem, and how they can get funding, because the funding demand for such projects is huge compared to a nature-based project. For instance, I can give you an example for carbon-neutral airline fuel for production-ready plant. You need an investment of about 100 million for a sizable production plant. Yeah? Below that, you shouldn't talk. Below that level here, you have the issuance of the credits, the monitoring, reporting, and validation to retirement of such a carbon credit. And below that, in blue, you have an emerging ecosystem, blockchain-based or token economy ecosystem, looking into financial services, into DeFi applications, and the borrowing, lending of carbon assets, for instance, carbon assets as collateral. You're looking into ETFs, you're looking at derivatives and more. And this is done at the custody side, for instance, with companies like Fireblocks, or as well, again, Flow Carbon here in the derivative space, developing solutions. Now, what are we doing? Greenbase, Web3 platform for green tech products and solutions, carbon credits, and investments co-owned by stakeholders. And I see I have only a few seconds left. Quickly, therefore, what are we doing? We digitize the product, we scale investments, we incentivize stakeholders, and we build basically a token economy on top of that with some key elements, including actually a platform token, an ecosystem token. That's what many others don't have, based on a public blockchain. You can see here the value chain of carbon neutral fuel and the touch points with the Greenbase infrastructure. The token economy actually is an incentive machine based on top of that, and an excellent use case there. We are working on that. I would love to hear from you, and this is actually, so to speak, a topic that is close to my heart, because back in 2018 I gave an interview for a documentary, Cryptopia film, and I said the real disruptive potential of blockchain will be realized by companies that manage to establish a sustainable token economy on top of a distributed database. With that, I would love to hear from you, to discuss with you, and to connect with you on social media. Thanks a lot.